Hi, this video is about top banking stocks which you should buy in your portfolio. So I'll be discussing the banking stocks that I'm holding in my portfolio right now and my reasons to buy those banking stocks, and also why I like banking sector in general at this point of time. So before I get there, I have one rule when it comes to banking stocks, which is never hold just one banking stock. When it comes to banking stocks, diversify your holding at least, for me, I choose three. So diversify your holding in at least three bank stocks. And the reason is that, from time to time, we've seen the best of banking companies. We've seen that happen with Yes Bank. Recently, we saw this with IndusInd. In past, we've seen this with SBI and PNB, whether it was Nirav Modi or Vijay Mallya scam. Best of banking stocks can't predict when there could be a big NPA or when there could be an accounting irregularity or when something which is beyond their control would just blow up. Nobody knows what's in the stomach of a bank. Sometimes even the accountants and bank management are caught unaware about that. So, always diversify your holding across three banking stocks. And with that, let's talk about, my top three reasons why I like banking sector at this point of time. So number one, right now, banking sector is available at the cheapest valuations that you'll find for banking stocks in the last many years. You look at stocks like HDFC Bank or Axis Bank. HDFC is trading at a price to earnings multiple of about 21.1 versus its historic 10-year average of about 24. Same is the case with Axis Bank, trading at about 12.8 versus 18, which is its historic 10-year price to earnings multiple. Bandhan Bank in particular is almost at a 50% discount. We'll discuss this in a little more detail. Bandhan is a very odd case. Another bank that I like, Federal Bank, is trading at about 12.2 versus a 10-year median of about 11. So it's just about there. And when it comes to banking stocks, there's periods of high credit offtake and periods when the credit offtake is low. So if you look at the past 10-15 years, you'll see that there was a period of, let's say, 2004 to 2008, which was the golden years of Indian markets, where there was a complete credit boom. The annual credit growth rate was about 25%. This was led by strong government push and infrastructure projects coming up, and the GDP was growing at 8 to 8.5% year on year. After that, we had a period after the financial crisis, which was when Federal Reserve started printing a lot of money, very easy monetary policy where credit growth was around 20%. Then there was the NBFC-led retail surge post demonetization in India. So these are some of the periods where credit offtake was higher than its average. Right now, the last 2 years, we've seen sort of 10.5% credit growth, but that's likely to change. And I'll tell you why that's likely to change. That's likely to change because in 2025 so far, the RBI has cut interest rates by 1%. Now, no one's realizing, I think not many people at least are realizing how big that rate cut is. Not only will this lead to a lot of corporates rolling over their debt, paying off their earlier debt and taking, new credit, but also for the next few years, a lot of the corporates will be planning their businesses in terms of expansion and all. Will find this opportunity, a great time to take credit and expand and do capex. So credit growth is likely to come back. When I was talking about the low price to earnings multiple of these banks, keep in mind this was despite the fact that credit offtake was low and profitability was not increasing. Now if profitability starts increasing, you will see that the prices of these banks would obviously start going up a lot. So my second reason why banking stocks right now are an absolute must buy is recently the government of India has done a lot to encourage banking sector in general. So it's not just cheap valuations, even the government policies. And first was the interest rate cut, and then in the union budget the tax exemption limit was raised to 12 lakhs of people earning salaries up to 12 lakhs don't have to pay any income tax, and then there's a 75,000 standard deduction on top of that. Now this a lot of people talk about will benefit consumption, consumer discretionary, FMCG companies. No, at first it will benefit banking. Money has to come to banking sector first before they start spending. And a lot of bank accounts which were not filled up before will sort of fill up the way Indians work. I would be not surprised at all if there's a lot more money coming into the banking sector in the next 3 to 4 quarters. So cheap valuations and favorable government policies, we're at the cusp of a huge banking boom in India given the long underperformance we've had in banking sector. And my favorites are obviously private sector banks, the banks that I've spoken about. So if I take them one by one, HDFC Bank, why I like HDFC Bank is because in addition to its interest income, HDFC earns a lot of its income from fee-based sources. So, I like banks, and this I think is the future of banking in India. In the US and in Europe, a lot of banks where interest rates are low earn a lot of their money from fee-based income, whether it's commissions, brokerage, third-party product distribution, mutual fund commissions. So HDFC, if you look at it today, earns about 40% or so of its income from fee-based income. Same is the case for Axis Bank. This is primarily why I like these two banks in particular. So if you look at the 4 banks that I'm talking about, which I have in my portfolio, all these banks earn a fairly high percentage of their profit from fee-based income. So that's one reason why I like these 4 banks. If you look at Bandhan Bank in particular, this is a very strange case. Bandhan Bank, I've been looking at this bank for a while, and the stock price has fallen about 75% since 2018. And it's just baffled me because the revenue has been rising at a CAGR of about 24-25%. It's available at a price to book of 1.1. Its valuation is, it's trading at 9.5 price to earnings multiple, as opposed to 19, which is its historic average. The company has acquired business after business, first in home loans, and then they acquired the whole mutual fund business of IDFC, which is now Bandhan Mutual Fund. So until everything right keeps happening, I'm not going to sell my holding. In fact, I'm adding slowly this bank. So for HDFC Bank, there's one more reason why I like HDFC. In addition to the fact that it has a really high non-interest based income, which is fee-based income. I should give this disclosure. For the last 4-5 years, I have actually stayed away from this bank, and I've spoken about why I don't like this bank. That's because, ever since they did their big merger with HDFC, they were facing severe margin pressures, which was very obvious. I was in no doubt when that merger happened, because we had a situation where they merged with another company, which was, their parent company, which had extremely high cost of borrowing in comparison to HDFC Bank. HDFC's borrowings was largely from bonds, external commercial borrowings, and from other banks, while HDFC Bank's borrowings were largely, CASA deposits, and current account deposits literally pay no interest to the people who deposit their money. So there was a major difference in the cost of borrowings for the two companies. No doubt that, as it was predicted, over the next 4, 5, 6 quarters, they would create a mammoth of, a huge company, and there would be really good benefits of cross-selling, and the two companies coming together would be good in the long run. I was sure that in the short term, until the credit deposit mismatch matches up, at one side you had HDFC Bank, which had very low cost of deposits, and HDFC, which had a high cost of deposit, and on the other side, HDFC in particular had a situation where the deposits were lagging and the credit growth was really high. So when the two companies merged, HDFC Bank, I thought, got the worst of it. So now that seems to have passed, and HDFC Bank finally has started showing improved signs of earnings. There's a positive growth trend for Q4 of 2025. There was some 10.5% growth in loan deposits. So that's really good. I think the other reason why banking sector in general has not performed as a whole is because for good or bad, until HDFC Bank performs, most of the other banks will not, because a lot of the money that comes to the banking sector is FII money and big institutional money which gets invested in indices, banking stocks. So the point is that, for good or bad, if you have to do well with your banking stocks, HDFC and ICICI, which are about 50% of Bank Nifty, these banks have to perform well because, for a sector to go through a re-rating and for money to start flowing into the constituents of that sector, big money has to flow in. And for banking and financial services, that big money is institutional money, whether it's FII or domestic institutions. Mutual funds have been investing, but banking is the favorite for FIIs, and FIIs have to come back. And whenever they do, and the time seems to be right, with an all-time low holding in some of these stocks in India, FIIs have to at some point turn positive and start investing. So, HDFC is one bank you cannot miss. And finally, one more bank which I really like, which I have it for I don't know how many years. My average price for this bank is 62 rupees. This is Federal Bank. And why I like this stock is because last 3 years in particular, I've been adding this stock, and that's because of 3 reasons mainly. One, they have a very big gold loan book. Think of it for perspective, they have about 60 tons of collateralized gold, and RBI itself, the government of India, has 900 tons of gold. So that's how big they are. It's a small bank. So as I said, I have 2 large banks, which is Axis Bank and HDFC, and 2 smaller banks, which is Federal Bank and Bandhan Bank. So it's a smaller bank and extremely easy to understand, very transparent bank. I think amongst all the stocks that I look at, their investor presentations are the most detailed, extremely clear, extremely transparent. If you ever want to have a look, go to their website, look at their investor presentations. They are growing their profitability and their revenue both at 25 to 28% over the last 3 years. Again, one of the reasons is because gold prices have been going up, and they've got so much gold that they can collateralize more, and that gives them more raw material to give out loans. So this is one bank that I really like in addition to Bandhan Bank. So these are the 4 bank stocks that I'm holding. And make no mistake, as a disclosure, I am deeply interested in the stock price of these banks going high.